Stay on top of stories about stocks that may impact the market or your portfolio today in Stocks Making News.
Well, Eli Lilly has announced that they have ended development, late-stage development, of a potential blockbuster cholesterol drug. Tracey, Ryniec, and diehard Cubs fan Dave Bartosiak here with me to discuss this latest development. Spooked investors a little bit, Tracey, when the news came out back on October the 12th, which was this past Monday. Drug is known as Evacetrapib, and I hope I'm pronouncing that correctly. And it's being abandoned in late-stage development, reportedly because it showed that the medicine had failed to treat high-risk heart disease. So on the surface, this would seem to be kind of a setback for Eli Lilly.
Well, yes. I mean, anytime any drug company has, where they have to cease the trial, it's never good. These big drug companies like Eli Lilly, have a lot of things in development, however. But Lilly's main issue has been that their mental health drugs, they had some huge blockbuster drugs like Zyprexa that was making billions of dollars, but hasn't been as much over the last couple of years. It's that revenue for those mental health drugs are trending down, so they have to find something new. Now, their choices is to buy someone who has drugs in the pipeline and acquire that R&D, or to spend on R&D. They've been spending on the R&D. So there was a lot in the hopes that this cholesterol drug would be one of the stocks or one of the drugs in the pipeline that would, give another boost to revenue. It was expected to be maybe between 600 million and 5 billion in revenue. No one really knows, and it maybe launched in 2017. So that's where you feel like the blow, if you're a shareholder, like, oh, this one isn't going to work. But there's still some other things in the pipeline, so all is not lost. And they do have what many consider to be a possible blockbuster drug in this Alzheimer's drug that they're developing. But again, that's really early stage. A lot is writing on it, but we'll see. Yeah,
I noticed you looked at Dave when you said mental health drugs, but we'll get to you in a minute, Dave, I promise.
I'm completely out of my mind after yesterday, so it's okay.
But there are other dynamics going on here with regard to the company. The company's had a declining pattern of earnings over the past 2 years. They're going to take a $90 million pre-tax fourth quarter hit based on this decision to end the production here. So is it a wonder that shareholders got spooked a little bit?
No, because like I said, they will, because this was a possibility to boost revenue, and now it's no longer there. And because the costs of developing this drug are now basically, being written off. But again, they have other things in the pipeline that they're developing. So I do think analysts will be cutting some of their earnings estimates because they were already incorporating this possible revenue in the future estimates that they were already putting out. So I do think some of them will cut. And so we could see a little bit of a decline in the earnings. But, they're still working through getting these new drugs through the pipeline, and that takes time.
Okay, so from your perspective, that down the road may change the whole picture on the company here.
That this drug is gone, or?
What's in the pipeline?
Well, obviously this one is out. So, yeah, I mean, it puts more pressure on them that one of their other drugs that's still in the pipeline, has to really come to fruition. Okay.
Dave, on Monday, October the 12th, after this news broke, stock sold off almost 8%. On the news, the sell-off wiped out roughly $6 billion from Lilly's market value, making for its biggest one-day decline since 2008. Still, overall, stock is up about 24% over the past year. So was that drug even factored into the numbers here for Eli Lilly?
I think it was. So if you look at the chart here, we had a pretty decent run-up to start the year. And then we kind of got in this range-bound sort of trade where shares have bounced in between kind of the $80 and the $90 range. I added a bunch of colors today so that we could really dig down on this thing. So it's range-bound, and whenever it starts to get towards the top, it looks like you could sell it or short it if you're really brave. And then when it comes down to this $80 range, you can go ahead and buy. And that coincides here with an indicator I have on here, the Commodity Channel Index, which is an oscillator or an overbought, oversold indicator. So it shows you basically when you need to think about going the opposite direction, right, of what the stock is doing. So even with that news, all it did is come down to the bottom end of that trading range that we've been stuck in for a long time. So if it breaks down below that range, then you sell it like your St. Louis Cardinals gear. If it goes above that range, then you buy it like you should be buying Chicago Cubs National League Division Series, winners gear. Yeah, absolutely. So I think it's okay here. I think you can peck at it a little bit. Again, 90 looks to be the top of the range, but if it breaks out, then it could be great.
It's Dave's chart of many colors.
That's right.
So might this stock, up 24% in the past year is not bad. When you take a look at the big picture, might the stock even have potential to move higher going forward?
Not until they work out some of these drugs, right? If we get some positive news on there and the stock starts to track closer to 90 bucks, then that's kind of the line in the sand of will it perform or will it just come right back down to the $80 level.
All right, well, thanks for all the input. In the meantime, you can check out more stock information on our website, Zacks.com, if you're not there already watching this video. And you can subscribe to all of our videos on YouTube and even comment on them there. Feedback's always welcome, even on Dave's getup. With Tracy and Dave, I'm Terry Ruffalo.